So, good evening to all of you. We welcome all and wish all a very happy 79th Independence Day for the country today. Today, in this auspicious day, we, the Sustainability Standards Board, welcome all for the 38th Vasudhaiva Kutumbakam webinar series. The topic for today is marching towards economic independence through SMEs. We have Sri Abhay Bajaj, who is Senior Manager Business Development, SME listing of NSE, with us, and we thank sir for your kind presence. Before we start the session, let us start with an auspicious note with the Institute's anthem. Yeah.
Asatu ma sadgamaya tamsu ma jyotirgamaya mrityurmamritam gamaya asatu ma sadgamaya tamsu ma jyotirgamaya मृत्युर्मामृतं गमय असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्युर्मामृतं गमय
Now I request CMA Dr. Aditi Dasgupta to brief about the topic and also introduce our speaker and guest for today. Over to you, Aditi.
Thank you so much, sir. A very good evening and a very happy Independence Day to everyone out there. 78 years ago, India claimed its political independence. In 1947, India woke to political freedom, but the chains of economic dependence still weighed heavy on our shoulders. We began our journey with empty coffers, fragile industries, and the people determined to rebuild a nation from the ground up. The early years taught us the value of self-reliance. We tilled our lands, built our dams, and lit our villages with the power of hope. In 1991, we took a bold leap, opening our markets, embracing competition, and showing the world that India's potential could no longer be contained. Today, in 2025, we stand tall as one of the fastest growing economies of the world, from importing ideas to exporting innovation, from seeking aid to shaping global trade. Economic independence is no longer just a dream. It is the living proof that the spirit of 1947 still beats at every Indian heart. Today, our journey continues this time towards economic independence. And at the heart of this journey are our small and medium enterprises, the dreamers, the doers, and the job creators. Just like our freedom fighters broke barriers to build a new nation, today our SMEs are breaking barriers in business, innovating, competing, and going public through the IPOs. Every SME, excuse me, every SME that lists on the stock exchange is not just raising capital, it's raising hope, raising jobs, and raising India's position in the world. Our focus today, marching towards economic independence through SMEs, the role of SMEs IPOs, is not just a discussion. It's a story of India's economic heartbeat. SMEs are the backbone of our economy, contributing nearly a third of our GDP and employing millions across the country. They are where innovation meets opportunities. In the recent years, SME IPOs have emerged as powerful game changers. They give small and medium enterprises the access to equity capital, improve governance, enhance visibility, and most importantly, expanding markets. Every SME that lists is not only raising funds, it's creating jobs, expanding markets, and strengthening the formal economy. This is the essence of Atmanirbhar Bharat. And India, where local enterprises grow into global players and where economic independence is built brick by brick by our entrepreneurs. So, as we gather today for the 30th Vasudhaiva Kutumbakam series, let's remember the tricolor doesn't just fly high in the sky, it also flies high in the ambitions of every entrepreneur building an Atmanirbhar Bharat. It is our great pleasure and pride to introduce our speaker, Mr. Abhay Bajaj, presently working as Senior Manager Business Development, SAP Listing as of NSE Mumbai. Sir has a total experience of 10 years in the financial services industry. He was previously associated with ICICI Bank Limited in the business banking working capital department for last 9 years. Sir is a master's in business administration, finance from ICFI Business School, Hyderabad, and a BTech in electronics and communication from GGSIPU, Delhi. I look forward for today's discussion as we explore how SMEs can unlock new pathways for inclusive, sustainable, and resilient growth for our nation. Over to you, sir, for your deliberations.
Thank you, Aditi. And
Thank you, sir.
yeah, thank you, Mr. Divendu, for giving my introduction. So welcome you all for today's webinar session, and wish you a very happy Independence Day, 79th Independence Day. And it's been a privilege for me to conduct this session on the very auspicious occasion of Independence Day. And so we will be going through today's session on SME IPOs in particular. So just let me share my screen a bit. Dimentuji, can you
Yeah,
please,
tell me,
yeah,
sir.
please let me know. Can I share the
Uh,
screen on my?
yeah, you can share, sir.
Okay, okay. So is the screen visible? Can anyone?
No, no, sir.
No. Okay.
Sir, I think PPT is not visible.
Okay. Is it now visible?
No, sir.
Now?
A blank screen is coming, sir.
Okay. Can I share the screen with you? If you can,
Yes, 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 you can, sir.
or share the file with you.
Yes, yes, please, sir. I can share on your behalf.
Okay. I think now it is visible.
Uh, no, sir.
No,
White screen is now it is coming, sir.
it's coming
No,
now.
it is only your. No, no, sir. Still not coming, sir.
Now.
Yeah, now it is coming, sir. Now it is coming.
Okay, okay, great, great, great. So, sorry for the glitch. I was just trying to figure it out. So yeah, so we'll be talking towards the SME IPOs today. So just let me brief you once while starting with this session. So earlier I was associated with ICICI Bank for last 9 years for managing working capital for different businesses, particularly SMEs. And from there I gained a very much insightful experience how the SMEs works, what is their business model. Visited many factories during that tenure, and it was really a, uh wonderful journey with the ICICI Bank, learning integrities of how the SME works, what are the bottlenecks, what are the challenges they face, and what is the thinking behind of starting those companies and how to grow big. So currently, since as Aditi rightly mentioned, the SME sector is the backbone of our Indian economy, and it almost contributes around 45% of our total industrial production, and around 40% of our total exports is being contributed by SMEs. So from there you can sense it how big the SME sector is contributing to our Indian economy. And now since today we are talking about the SME IPO, so the IPO, if you are aware about, it stands for initial public offering. So it's for those companies who are wishing to go public, wants to raise more funds for the growth capital, wants to be more visible to their investors and shareholders, and those who are exhibiting strong corporate governance standards. So therein there lies an opportunity for them to be visible to larger audience across the globe, and from there they can reach greater heights. So since in ICICI I was part of the business banking, wherein I was involved in the debt financing of the companies, where the company used to take business loans against the collateral, and we used to offer the OD and other working capital products so as to meet their operational requirements. So it was a high interest capital if you compare it with the bank finance and the IPO, the public money finance. So it is a high interest capital which the companies raise while going for the bank financing. But the bank financing, on the other hand, initially the companies had to they have to resort to the bank financing because there are some restrictions, there are some limitations, or there are some guidelines which are laid out by the SEBI for for a company to go public. So we will be talking about those also through the session. What are the guidelines? What are the conditions that company has to comply with as per the SEBI and the Companies Act for the company to go public? So so recently in NSE, I encountered some of the listing ceremonies live, and was fortunate enough to part of with the listing ceremonies of different SMEs which go public, and it was a very emotional uh, seeing all three generations, first generation, second generation, third generation, all together on a stage and ringing the bell, and they had very tears in their eyes, as it was a very historic and momentous moment for them to go public. So SMEs, they are the backbone. So we are very fortunate, and we are very lucky that we are uh, experiencing this SME boom in Indian economy, which will really contribute towards the economic independence that this session is all about, marching towards economic independence through SMEs. So let's start with the PPTs. So for the SME IPOs, the NSE, the National Stock Exchange, uh, we are having a one dedicated platform, uh, which is called NSE Emerge. So NSE Emerge is only for those companies, SME companies, those who are willing to go public and raise money for their future growth expansion. So NSE is one of the largest multi-asset class exchange globally. So it was formed in 1994. This organization, it's already around 30 years since the formation of this market infrastructure institution, which is the NSE, uh, and it is the world's largest derivative exchange for the fifth consecutive year. So you can rightly see many of the trades which are happening, futures and options, or derivative contracts which are being traded. They are mostly on the NSE by in terms of volumes. So it is the fifth. It is the largest, sorry, derivative exchange for the fifth consecutive year, and it ranks second in the equity segment in the world in terms of number of trades. And as now in the bottom you can see 5.16 trillion US dollars is the market cap uh, of the all the companies which are listed on this NSE Emerge platform, or rather NSE. Uh, so there are different products where NSE helps and SMEs to grow and raise capital. First is initial public offering, IPO. So IPO, the company can either go for the main board or for the SME. So main board is for those companies which are big corporates, uh, which are not SMEs. And for SMEs, there is a particular platform which I shown to you, NSE Emerge. For the debt securities, there is another platform, electronic bidding platform, uh, public debt, green bonds. So these are all debt securities from where the companies can raise debt capital. And next is social stock exchange. So coming now next to NSE Emerge. So NSE Emerge is the platform which NSE launched in 2012. It's been around 13 years since the launch of this platform. So this platform was raised particularly for SMEs to raise funds and be listed on the stock exchange. And as the as you know, the banking, the different commercial banks, rural banks are governed by the RBI. So we are the exchange being regulated by the SEBI. So all the rules and regulations which are laid out by the SEBI, we have to comply and abide by that. And there are various intermediaries which are trading with us in form of brokers, trading members, merchant bankers. So these all are intermediaries which are helping many companies, SME companies, to go public and be their support while throughout the journey uh, from the idea of going public to the actual company being listed on exchange. So we are very working closely working with closely with our various stakeholders, intermediaries like investors, trading members, brokers, merchant bankers, who all form part of the ecosystem of this capital market, big universe of the exchange. Now, still now, we have listed 656 companies, uh, and from starting from 2012, and the capital total raised is around 19,170 crores, with total market cap of 2,18,765 crores. So these all figures are of latest figures as of 11th of August 2025, and the average fundraising per company is 29 odd crores. Now you can, if you can see the SME growth chart. So the SME growth, as you can see in the initial years around 2012, 2013 to 2017, so it was at very nascent stage. Many SMEs were not aware about the idea of going public or how to raise additional funds by listing on stock exchange. So later on, post, you can say post COVID, so the graph has already that has picked up very abruptly. So if you can see that in 2024-25, last year, we the total number of companies which got listed on NSE emerge were 163, and for which the total funds raised were 7,1100 crores. So the growth path, which if you can see it from the graph, also the number of companies or the number of applications which we are receiving right now is going to increase, is really increasing year on year, and this path is likely to grow further as more and more companies they uh, get to know about this SME IPO. So naturally they will be willing to grow more faster, and they want to be more uh, publicly visible to their various stakeholders, and also in order to regain or gain the trust of the existing shareholders, they want to exhibit strong governance standards so that they are visible to everyone and they can fund their growth rapidly. Now let us see what are the conditions or what are the criteria for any SME company who is looking to go public, how to get listed on NSE Emerge. So the basic, the SEBI's eligibility criteria, what SEBI has said to the exchange, is that the first and foremost, the any issuing company or the SME company, it should be a limited company. So it can be a limited company or it can be a private limited company. It So if it is a, suppose, say, proprietorship company or a partnership company, then first and foremost that company needs to convert into private limited company, and for one complete whole year that needs to run like that private limited company or limited company. Thereafter only that company can go for listing on NSE Emerge. So those the first criteria is the company should be a limited company. Second is the issuer's post issue paid up capital at the time of IPO should not be more than 25 crores. So if the existing paid up capital of any SME company is, say, 10 crores, and post issue of the capital, the paid up capital increase to 20 crores, then that company can go for SME as go for listing on an SME platform, NSE emerge, or else if that for issuance of capital, the paid of capital goes above 25 crores, then necessarily it needs to go to main board only. There is no option of SME in that. But if the paid up capital goes above 10 to if it stays between 10 to 25 crores, then the company can go for SME also, or else it can go for main board also. So though these are the criteria, the basic criteria uh, which the company needs to fulfill that. And apart from that, the NSE as we as a organization has set up few criteria uh, for any company to be qualified for listing on NSE emerge. So these are total 4 points. First one is the track record. The company should have 3 years minimum operational vintage of operating in the same industry. So the 3 years financials are mandatory. And secondly is positive net worth. The capital should be net worth. The capital should be positive. The net worth, which as per the balance sheet, it should be positive. Next one is the profitability. So the company should have operating profit of 1 crore for 2 out of 3 last financial years. So if we are now sitting into 2025, 2026, so for the last 3 financial years, say 2023, 24, and 25. So out of these 3 financial years, there should be operating profit of minimum of 1 crore for at least 2 out of 3 years. So that 2 years can be either of from any of last 3 financial years. And next and last, that free cash flow to equity. Now this clause was introduced in September last year only. Um, so this free cash flow to equity, though it should be positive for at least 2 out of 3 financial years. So there's an additional requirement from the NSE, the exchange point of view. Next is the regulatory framework. So in the regulatory framework, minimum dilution of 25% equity should be diluted by the promoter or promoter groups. Next is DRHP. So DRHP stands for Draft Red Herring Prospectus. For any company to go listed, to go public, that company needs to appoint a merchant banker. So that merchant banker is responsible for every due diligence on the operational point, or from the legal point, or from the financial point of view. So the merchant banker is responsible for uh, drafting this DRHP uh, in consultation with the promoter and promoter groups. So this DRHP, uh, there is some fixed format which is laid out by SEBI. So these all parameters should be covered in DRHP. So notably, the financials, the business model, promoter groups, industry, any risk factors, corporate governance standards. So these all parameters form part of the DRHP. Next is the underwriting, 100% underwriting. So if you compare it, SME IPO from the main board IPO, so in SME IPO, the underwriting is 100% underwriting is mandatory, wherein the market maker is responsible for underwriting of the equity shares which are due for uh, offering to the public for at least 3 years, so as to ensure the liquidity in the market. Since the liquidity, when it comes to the SME IPO, the liquidity is an issue. It is still a challenge. Post listing, many SME companies don't find any buyers or sellers actively trading the script. So thereby there is very less liquidity. So it becomes very difficult for any person to uh, sell out in the secondary market. So in order to counter that, the SEBI has mandated market maker to place the buy and sale bid, both sides of bids for trading in equity shares for at least 3 years, so that there is sufficient liquidity maintained in the particular script. And the many potential investors can also participate, and they can gain substantial returns by betting on that. So next is migration. So any company which looks to go public on SME platform, ultimately we as an exchange, we want those companies to migrate to the main board, since so those companies which are willing to grow faster and they have potential to grow much bigger, eventually they have to go to main board and comply according with the SEBI regulations and the exchange regulations. Next is post listing compliance. So post listing compliance is the compliances which the companies need to follow on half yearly and annually basis. So in SME IPOs, the SMEs need to report their half yearly financials and the annual financials, and also the corporate governance norms need to be strictly adhered to. There should be a transparency in reporting of all the information. So there should not be any instance that any particular piece of information is being hidden from the exchange or from the SEBI. So this all forms part of the post listing compliance. So in earlier slide, we talked about the FCFE, the full form free cash flow to equity. So this is the formula which the exchange follows while calculating this free cash flow to equity. So herein we have showed you one example. Uh, so how it is being calculated for a particular financial year. So as in the condition, we have said that it should be positive. So free cash flow to equity, you can refer the cash flow statement of any company. From the cash flow statement, you will get these headings, uh, all just like cash flow from operations minus capital expenditure plus net borrowings minus interest expenses. So these all parameters you can get it from the cash flow statement of a particular company. So here cash flow from operations is calculated as the cash generated from operating activities minus the income tax paid, and the capex is calculated as the purchase of any property, plant, equipment, including capital work in progress, uh, minus sale proceeds if you have any sold any property, plant, or equipment. So the net capex you will be able to calculate from that, and the net borrowings will be the proceeds if you have raised long-term loans and short-term loans. The loans, the proceeds of that loans will be added up, and if you have paid any interest or repay any short-term loan and long-term loan, that will be subtracted. So that will give you the net borrowings, and based on this formula, you can calculate the FCFE. So lately, uh, considering this parameter, so many of the companies which are funding their capex from their internal accruals. So if you can see, if you are if you as a company don't resort to any long-term borrowings or short-term borrowings, and if you fund the entire capex through your own internal accruals, so therein the FCFE will come negative. So it becomes a negative point for the exchange. But on the other hand, if you look upon further delve into it, so it should not be the case. So we as a exchange are working on this parameter also lately to alter it or to just tweak it a bit, so that the companies who are raising funds from the market or from the banks or from the financial institutions, they are not penalized. So next is the SME IPO eligibility as per the SEBI guidelines. All the conditions which we are going to study is written in SEBI ICDR. So ICDR stands for the issue for capital disclosure requirements. Uh, so all the SEBI laid out guidelines are mentioned in this ICDR page of the chapter 9 of the ICDR related to the IPO for SMEs. So as we studied earlier, the minimum operating profit should be 1 crores in 2 out of 3 years in immediately preceding financial years before date of application. Next is OFS. OFS stands for the offer for sale. So for any issue which is for any SME which is coming up with a IPO, there are two components. One is the fresh issue, and second is offer for sale. So fresh issue, there is entirely fresh issue of capital. The new shares are issued, and the company raises capital for funding their business expansion, or for any repayment of loans, or uh, for any general corporate purpose or any working capital purpose. Whereas offer for sale is just that the existing shareholders are selling their stake to new shareholders, so the new shareholders can be the public as well. So in offer for sale, the condition which the SEBI has earmarked is that offer for sale should be kept at 20% of the total issue size. For suppose if the company is coming up with, say, suppose 100 CR IPO. So in 100 CR IPO, only the 20 crore should be the offer for sale, and rest will be the uh, fresh issue of capital, 80 crores. So the 20 crores will be the exchange between the existing shareholder and new shareholder, while the company will get to raise additional capital of 80 crores for funding their growth. And also additional guideline is also that the selling shareholder cannot sell more than 50% of their shareholding. So suppose if there is any shareholder A who is holding 1 crore of equity, and so he cannot sold more than 50 lakhs of his equity at the time of IPO. So that is the purpose behind it. Next is the restriction on repayment of loans from promoter and promoter groups. So if you can see that if any SME company has taken loans from a promoter or a sister concern, or from any directors, so for these loans, the repayment of these loans is not permitted from the SME issues. So these loans need to be paid by the company itself. So the issues which the issue, the proceeds of the issue which will not be permitted for repayment of the loans taken from promoter group, or any related party. So next is the conversion of partnership, proprietorship, LLP to company. So as we rightly stated before, that the company should be a limited company before going public. So if any company is in existence for, say, more than 3 years, and but the constitution is not limited company, it's the constitution is a partnership, proprietorship, or LLP company, so that company should be converted to a limited company first, and that company should be in existence for one full financial year post conversion before approaching for listing. So suppose if we are here in August 2025, if any company now wishes to go public, and if that company is a proprietorship firm, so mm, so for for the company to go public, it needs to wait at least 1.5 years uh, from now on to approach for the listing process. Next is the 1 year. There is 1 year cooling period before SME IPO for a company if there is a change of a promoter or new promoter have come after acquisition of 50%. So yeah, so in case of the SME company, if there is any major shareholding change of the major promoters, those who are having more than 50% of the shareholding, then there is a cooling period of 1 year before that company can approach for listing. If there is a material change, then there is a 1 year cooling period. If the promoter shareholding, suppose there is any promoter who's holding, I mean, any shareholding of 20% or 30%, if it changes, then there is no cooling period. But if there is cooling period applies only for those companies wherein the promoter shareholding changes substantially in excess of 50%. Next is the minimum application value. So the minimum application value is 2 lots with application size a minimum of 2 lakhs. So in SME IPOs recently, earlier prior to recent amendment, the investors, the retail individual investors, they invested in SME IPOs in 1 lot with minimum application size of 1 lakhs. Now it has been doubled, uh, so that they are imparting more liquidity and more interest in SME IPOs, and they want genuine investors only to go to come and bid for SME IPOs, and they want regular investors, those who can stay put and those who can stay invested. So the minimum application size for applying in IPO for retail individual investor is 2 lots with application size exceeding above 2 lakhs. So next is a number of allottees. So the number of allottees should be minimum of 200. So the companies which are looking for raising capital, the minimum number of investors at the time of allotment should be 200 for the companies to go public. Next is general corporate purpose. So the funds which are being raised for the from the IPO process, there is a capping to general corporate purpose. So it is capped at 15% of the amount being raised or 10 crores, whichever is lower. Next is public disclosure of DRHP. So the DRHP, the draft red herring prospectus of any SME IPO is to be filed with stock exchanges, and this needs to be available for 21 days to the public, so that they can provide their comments on DRHP by making public announcements. So the any public disclosure of DRHP is being done in the English, Hindi, and one regional newspaper where the registered office of the issuer is located. Next is paid up capital. We spoke about it earlier as well. So for any company for paid up capital which is more than 25 crores, then they need to go to main board for the listing. Next is the monitoring agency. So the monitoring agency is the concept of monitoring agency is introduced if the issue size exceeds 50 crores, which excludes the offer for sale portion. Coming next to the next slide, the introduction of the statutory auditor certificate. For any issue size which is less than or equal to 50 crores, the company needs to submit a certificate from the statutory auditor for utilization of issue proceeds. They need to get the certificate from the statutory auditor specifying how the proceeds of the issue are being utilized, and this needs to be uh, shared with the public till the issue proceeds are fully utilized. Next is if the object of the issue is the working capital, is working capital which is exceeding 5 crores of rupees, then also issuer shall submit a certificate of the statutory auditor for specifying the utilization of issue proceeds, and the financials needs to be filed quarterly along with this as well. And next is the allocation in the net offer. So for any investor to bid in the IPO, there are three types of investors. One is the QIB, qualified institutional buyers. Second is NNI, non-institutional buyers, and NNI, non-institutional investors. And third is retail individual investors. So, as per the SEBI guidelines, uh, the 50% of the issue should be earmarked for the QIB investors. Uh, 15% is reserved for the non-institutional investors, and 35% is reserved for the retail portion. So in QIB, many insurance companies, large institutions, corporates, uh, insurance companies, mutual funds. So these all form part of the QIB portion. While in retail, so retail, as you can rightly understand, the common people, those who bid minimum maximum of 2 lakh rupees, and those are non-institutional investors are those investors those who are bidding more than 2 lakhs but less than 10 lakhs. While QIBs are those investors those who are bidding with application size more than 10 lakhs. So this is the definition on as per the SEBI. Now see, when can a company list on NSE merge? So we have studied the few regulations, few guidelines which are laid out by the SEBI, which needs to be complied by the company while going for public. Now, if you can see from this chart, uh, first one is on the bottom of the pyramid is the startups, which are highly promoter owned. There is own promoter capital only, or from the friends and family, those who are invested in the company. Uh, Till that time, the company has not raised any finance from outside. Now, next comes the early stage where the company goes out in the market and gets the loans, business loans from the banks and financial institutions. And it is also this stage only where the many private equity or angel investors, venture capital funds, they look for the startups, those who are promising startups, those who can grow big. So this is that stage where the venture capital funds come into. Next is the growing phase where we NSE emerge platform helps those companies to grow big. Uh, Here the venture capital or the private capital, private equity investors, they may exit, seeing the opportunity, seeing the timing of the market, while the companies are looking for aggressive growth and more funds, and due to some limitations in owing to the public institutions or the banking institutions, they may find it difficult to raise funds from the banks itself. So therein we NSE are helping those companies in this growing phase, so that they get the required capital, and they can grow much faster, and they can compete with big giants, and also go ahead from their peers. And the last stage is the large company, where the those companies which which get listed on NSE emerge. They eventually try to go to main board, wherein many retail investors and large group of public they participate in getting the shares of that company. And also many institutions, large institutions, they also have an eye on the big companies, those who are having great potential in the market, so that they can benefit from their growth as well. So now let us see the various steps which any company, NSE company, needs to follow uh, while listing on NSE emerge. So we as an exchange are dealing with many intermediaries, be it merchant bankers, trading members, transfer agents, uh, market makers. So these all are form part of the NSE emerge ecosystem. So first and foremost step is the appointment of intermediaries. So in the appointment of intermediaries, the company they approach the merchant banker. The merchant banker now next he prepares the documentation, that DRHP, draft red herring prospectus, as per the format of the SEBI, and he conducts the due diligence on part of the company, uh, related to financial aspect, legal aspect, operational aspects, in consultation with the borrower only. He files those offer documents, DRHP, with the platform, with the NSE. Now we as an NSE have a regulatory team, uh, those who are working on the appraisal part of it, and they do the proper due diligence, uh, whether all the guidelines have been complied with by the company, have been mentioned in the DRHP. So once the DRHP is finalized, we give the in principle approval to those companies, and now those companies can file the RHP, red herring prospectus, with the ROC and with the exchange. And basis after that, the company can uh, go for the many different road shows, presentations for for publicizing their issue. Uh, so thereafter the share allotment and share allotment happens. uh, many different bidders, they go for bidding in the IPO, and thereafter the share allotment happens, and then final the listing happens on our NSE emerge. Now let us see, why should SMEs consider listing. So there are few important benefits which SMEs should consider while listing. Although it is very challenging on their part to be more compliant, more transparent, but it is a good habit to inculcate, as it will surely help them while going public. So the company should adhere to the corporate governance standards. It should be more transparent while reporting their profits or while reporting their financial figures. So first and foremost, there is no fixed there is no burden of the interest on the SMEs, those who are uh, wishing to go public and raising funds through public, as they don't have to pay any interest on that. Next is as I rightly mentioned, that it funds their growth. So it is a faster avenue for those companies, those who are looking to grow big and much faster. So this platform provides them the opportunity to grow faster and unlock their value and be more visible to the public. And it also creates a branding for those companies. And if I can rightly say that if branding is an afterthought, you will stay invisible no matter how good your product is. So it all really matters. What really matters is your good product, means your good company, along with the brand also. So it helps in building a great brand, good brand for you, for yourself, by going public. And also there are some limitations which we talked about, that banks may not find suitable for funding. Say up to a certain limit they may find it suitable, but after a certain limit they will be having some certain limitations on their policy front, where due to some collateral requirement or due to industry exposure, they limit themselves up to that. But while in case of SME IPO, there is no such issue. As long as you are having growth plan in place, and your company is reporting good profits, and all the conditions are complied with, so you can surely look for raising capital through public IPO. So these are the opportunities for any practicing chartered accountant. Uh, so as part of the merchant banker also, these are also activities which a CA can also consult with the SMEs in particular. uh, they can also conduct the financial due diligence, and audit services on their part, and help companies to uh, come public. So these are all opportunities for any CA, those who are looking in the SME IPO space. Next, I can highlight there are many MOUs that we have filed with many state governments. So we, as part of NSE, are also responsible for spreading awareness among the different stakeholders, say issuers, merchant bankers, CAs, consultants, that the SME IPO is also one of the routes for any company looking to raise funds aggressively, and having great potential in the industry itself. So they can come for many events which we are organizing also, or which we we are collaborating with many state governments. So it's a very great step which we have taken, or we are taking on regular basis with many state governments. And so this is yielding the results which, if you can see from the graph of many SME are coming for IPO. So this is the result of that only, that the awareness is one of the issues which was not prominent enough in the earlier stages, but now during the last 3-4 years it has surely picked up, and it's a good option, or it's a fair rational approach for any company which is looking to go public. And also next, if you can see the listing incentives also being offered by various state governments. So state governments are also pushing, many state governments are also pushing and incentivizing the companies which are looking to get listed. So if you can see in the Kerala state, there is reimbursement of 50% of the IPO expenses, which is subject to maximum of 1 crore. So there is the highest of all the states that the state government is looking to help and incentivize those companies which are looking to go public. So this is the organization hierarchy, wherein I am the part of the senior manager, SME listing. I am reporting to Ms. Parvati Murthy, who is the associate vice president, and she is reporting to Krishnan Iyer, who is the senior vice president. Thank you all. Yeah, so we now came to an end to this session. I hope you found it really insightful, or if you have any questions, you may ask now.
Thank you, sir. I think it was a very nice webinar. You presented in a nutshell all the
Yeah.
uh, facts and figures you have given. So a few questions, uh, part of which is that you have given the various listing parameters of
Yes.
SME.
Yes.
So, sir, what is the government initiatives or policy support which makes this SME listing more attractive? Can you please specify some policy initiatives?
Sir, actually, the SME IPO itself is a concept which it is not a new concept. So it is a very old concept, but recently, if you can see from the MOUs that we have signed with various state governments, so we are going to tier 2, tier 3 cities as well, me as well. Uh, and spreading the awareness among the issuers, and conducting the focused promoter group sessions, and understanding their psyche on and the challenges what they are facing. So many a times we encounter that the policies the policies, there are no such policies as such, but the state governments are also uh, understanding from our side of story as well, uh, on what we have to offer to them. So it's a actually a old concept, but these state governments are now aggressively asking many entrepreneurs of their state to come forward and speak up and share their success stories. So therein the word of mouth plays in, and the success of SME IPOs grow further. So it's all a collective effort. The policy work, the policy is already laid down by the SEBI, right, sir? So we have to go by the SEBI guidelines, but how to uh, means inculcate and how to grasp those policies, it is the responsibility of each and every one of out of us. We as an exchange or as an intermediary also, if there is any consultant which any SME company consults before taking any financial decision, so that financial consultant should be also aware about the all the regulations which are laid down by the SEBI, so that the company is compliant enough to while going for public.
Right, sir. Sir, what is the minimum size of application in terms of rupees uh, for
Yeah.
this IPO listing of SMEs?
Yeah. So for any company who is looking for say uh, raising funds to the tune of around 20 crores, 25 crores, so we welcome those companies on behalf of NSE, I'm saying. So minimum of 20 crores, 25 crores of capital which the company is raising for their businesses. So we are welcoming those companies.
Sir, regarding this, the NSE listed various other companies are coming for IPO,
Yeah.
and this SME. So figuratively, what is the difference between both the IPOs? Means
Main
any
board.
procedure, yeah, main board IPO.
Yeah, yeah. So the first and foremost requirement is for any. So suppose say today a company A lists on SME platform of our NSE called NSE Emerge, and for that company to migrate to main board, so there is a minimum track record of 3 years. So that company needs to be stayed in NSE Emerge for 3 years at least. Thereafter only that company can migrate to main board, or else if that company wants to straight away go to main board, uh, he can do that, but we as an exchange, we want those company first to migrate to SME first, so that they get the gist of uh, public reporting, many disclosures which needs to be complied with, since many of the SMEs are family owned offices, and uh, they are not professionally controlled businesses. So they might find it very difficult while going straight away to the main board and getting to comply with all regulations of the SEBI and the exchange. So it becomes very prudent for any new SME company to get first listed on SME platform, uh, get the real idea how the share market or how the exchange works, and how the intermediaries are working in tandem, and thereafter once the company is more compliant, and once the company is adhering to corporate governance standards or is more transparent, then they can go to my main board. Otherwise than that, there is no such differences if you compare it with a main board or SME. There are some guidelines which are laid down by the SEBI for that company to comply with the main board, but those are not very stringent. So these are mainly threshold requirement.
Right, sir. Sir, we have seen in IPOs, many people are coming for this benefits. Like once the IPO is listed, they sell the shares, they get the market benefits out of that listing.
Mhm.
So do you think that popularity of IPOs in mainboard IPOs, many of the investors are for this market gain? In the SME IPOs, do you feel that sort of trend, or is there any long-term association with the company?
So counter that, in SME IPOs, the liquidity is very less as compared to the companies which are listed on main board. Naturally, the size of people, those who are uh, trading or those who are coming to trade in SME segment, they are much lesser as compared to the main board. So the SEBI is taking steps, and also they have laid out some guidelines for any existing investor to have certain period of lock-in. So they have introduced way before that the promoter shareholding, then needs to be minimum of 20% in the uh, capital structure, and also the promoters have to retain their share for at least 3 years.
Right, sir.
So the SEBI has means they are working on that also, and they have introduced certain lock-in requirements for both promoters and non-promoters.
Right, sir. Sir, in the main board IPOs, we have seen many of the companies where QIP participation is the maximum and retail participation is more or less moderate. So, what is the combination in this SME IPOs?
In SME IPOs, since the investable amount, if you look at the retail individual investors, it has now increased to application size of minimum of 2 lakhs. So so this step signifies that the SEBI is looking for those investors only, those who are serious enough or those who have risk appetite enough to stay invested or invest in SME IPOs for a quicker gains. So the people who are bidding or those who are coming in SME IPOs, they are the serious investors. They understand the company, and therein they are putting their money into that. So they want a serious public to come and stay put. They don't want any public to just to just for the sake of gains they invest in SME IPO and uh, go away.
Right, sir. Sir, in the main board IPOs, we have seen many of the promoters, they are actually selling their stake through this IPO process.
Right.
A very part of it is also invested for maybe expansion of the
Correct.
business. But
Correct.
do you think in this SME, this promoter holding is offloaded through this IPO process, or it is done to pump prime the company as a whole?
Sir, it can be both aspect as well, depending upon the industry which the company is operating in, what is the market condition of that company, what the company is looking further, say further 5 years down the line. So if they feel that uh, they can offload their share, they try to offload the shares as well. So it presents an opportunity for the existing shareholders as well to exit and make a gain out of it. Or uh, if the issue, say, the guidelines also permits certain companies to have a certain portion of offer for sale as well, because the paid up capital is one of the requirements, one of the criteria for any SME company to get listed. It should not be more than 25 crores. So if it exceeds 25 crores post issue paid up capital, then the company is not eligible for getting listed. So to uh, be under that threshold of 25 crores, the company has to come out with the offer for sale portion as well, some portion of offer for sale as well.
Right, sir.
Hmm.
I think many other questions are also there, but due to paucity of time, I think we can take it further. in
Sure,
the
sure.
coming sessions where we will be presenting in other forums also. So with this, we close today's webinar. We thank wholeheartedly our speaker, Abhay sir, for his wonderful presentation. We also thank his senior, Parvati madam, also for initiating this webinar today in this forum. We also thank our SSB board member, Dr. Ranjit Krishnan sir, who is always helping us in organizing this webinar in this massive scale fortnightly. We also thank CMA Dr. Aditi Das Gupta, who is Joint Director of SSB. She is contributing a lot for our activities. We also thank our chairman would be CMA Dr. Ashish Thatte sir and also our President, Vice President for their continuous support in our all endeavors. We also thank our other departments like IT department and security department for helping us to organize this webinar on a holiday. And with this, we close today's webinar. We hope our next webinar, which is on 29th August, our Mr. Mukund Shivakumar, who is sports scientist and head coach junior cricket, will be joining from Melbourne on the topic of holistic well-being and sustainability thinking beyond. We hope you will all join for that session. With this, we come to for today's close, and we thank all for your participation on a auspicious holiday today. Thank you all.
Thank you all. Thank you. Thank you, Divenduji.
Thank you, sir.
Thank you. Thank you
Thank
all.
you.